Hello, I'm Richard Hunter, Head of Markets at Interactive Investor, and welcome to our look ahead for the week commencing the 6th of April. It will come as no surprise that now we've left the end of the first quarter, the figures are making for fairly ugly reading. If we look at the main four indexes that we normally cover, at the end of that first quarter, the Dow Jones was down 23%. We've had a weak couple of days since, even in early April, so that the current year-to-date figure is that the index is down 25%. Similarly, at the end of the first quarter, the S&P was down 20%. That's now 22%. The Nasdaq was down 14%. That's now 17%. And our own FTSE 100 at the end of the first quarter was down 25%. That's now 28%. So we've had a lot of fiscal and monetary stimulus. We've had something of a bounce in the oil price on the hopes after President Trump's tweet that actually Saudi Arabia and Russia would be getting around a table. That being said, and despite the hike, the oil price does remain down 52% in the year to date. But needless to say, if there are any positive developments over the next few days, that could slightly underpin the market. So moving into next week, we've got a 4-day trading week, obviously Good Friday coming up at the end. We'll also be keeping an eye on any economic factors coming out of the Eurozone, the UK, or indeed the US. You may remember that this time last week we mentioned that the initial jobless claims in the States had risen from previously being at 282,000 to 3.3 million. This week that figure has literally doubled. 3.3 million has become 6.6 million. So clearly there's a great deal of work to do globally, and it may well be that we're actually already in a global recession. So any signs of positive news will be well received by investors. In terms of the UK next week, we've obviously had this moratorium on companies reporting, but as things currently stand, although it's not absolutely been confirmed, Tesco is due to report its full year numbers on Wednesday, the 8th of April. It may be worthwhile keeping an eye out for that, simply on the basis it would be extremely interesting to see exactly how the supermarkets have been faring during this coronavirus outbreak. And of course, in terms of the wider position, we've also had something of a dividend drought. The dividend universe is rapidly shrinking, and as companies continue to make announcements, we'll see whether it's going to be pretty much across the board. There's a few notable exceptions who have said so far nothing about cutting their dividends, mainly in terms of the high dividend payers in the form of BP and Shell. Thank you for watching. Have a great week.